Hello friends, welcome back to the channel, and in today's topic I'm going to share with you what are some of the changes that I did to my investment portfolio to reduce my risk and at the same time trying my best to maximize return. So with the recent market volatility, one realization that I had was my portfolio was actually moving about 2.5 times compared to SPY. So basically what it means is that when SPY goes up by 1%, my portfolio will go up by about 2.5%. But it's the same thing. If let's say SPY goes down by 1%, then my portfolio itself will drop by 2.5%. So when the market is bullish, definitely this will be a good thing. But however, market itself can move in both direction, up or down. So it's good on the upside, but when it's actually drawing down, it can be brutal. So maybe I can share with you a bit of context. How was I behaving 5 years ago? The previous me would have been very tech heavy because I believe that right now, going forward, the market itself, tech itself is going to be the thing that boosts productivity and increase revenue for all the companies. And as of today, my thoughts and belief on this does not change. I still believe that tech will be outperformance. So the previous me would have been very heavy on tech, trying to maximize my return. So if let's say you are a buy and hold investor, and if you are able to tolerate the volatility, this is definitely a strategy that will work for you. But however, for my portfolio, I do not do simple buy and hold only. I also run like strategies on options such as like leaps, synthetics, credit spreads. And naturally, when you add complex layers to the investment portfolio, your risk profile will change for the investment portfolio. So with my option strategies, I'm able to generate pretty good return, and I'm running a small account challenge that you can see last year performance. I did about 60% for my investment portfolio for the small account challenge. So if you're interested, I will leave the link in the video below. So my realization comes to this is, since I'm already doing all this complex strategy that adds on further risk for my investment portfolio, I do not want my stocks to be something like a volatile ride again. Hence, I have been like trying to find some stability in my investment portfolio. So what I did recently was that I have started introducing other elements into my investment port, and that itself, one of it will be the vwra, which is actually a total stock ETF. So this ETF is listed on the London Stock Exchange. Dividends are reinvested. Hence, there wouldn't be any like additional dividend tax or estate tax matters. And this vwra, in terms of the total stock, basically what it means is it holds equities from the developed market and emerging market, from the large cap companies to the mid cap companies. So if you're someone who believes that the economy will keep on growing ahead, this can be an ETF that you might want to consider adding to your portfolio. But definitely do your own due diligence. Not financial advice, just sharing my thought processes. So I decided to add this to the investment portfolio to further reduce in terms of the US exposure. I understand that the vwra US exposure is still about 60 overall percent, but it is definitely still a better pick compared to just 100% pure US exposure. And adding the vwra for me actually gives me more peace of mind to know that there's this stability core pillar sitting there with a lower beta compared to SPY. So the beta for vwra is actually around maybe 0.85 to 0.9 to compared to the SPY of 1. Hence, it is less volatile compared to SPY. But the thing I struggled the most with on adding VWA was that I see that VWA performance isn't as good compared to QQQ or SPY in the long run. So the previous me would have been struggling to add this component into my investment portfolio, thinking that I would want to have outperformance. I do not want to have laggards in the portfolio. But however, as I grow as an investor, I noticed that not all components of your portfolio should be aiming for outperformance. There are different roles of different assets in your portfolio. And for VWRA, the whole idea of adding this into my portfolio is not for outperformance. It is more for a component to add stability so that I can sleep more peacefully at night. And I already have been very heavy on tech. I do have my credit spread strategies, my leaps, synthetic longs, all this running. This naturally already add on a further layer of risk. Hence, right now, I'm very comfortable holding VWRA in my portfolio. As of now, VWRA holds about 10% in my investment portfolio. The aim itself is to slowly accumulate it up to 20 or even 30% of my portfolio. and this itself will act as a good stabilizer for the overall portfolio of mine. So I think in summary, we have to know every individual tools are made for different things. So even let's say if you love lobsters, you cannot have lobsters every single day. It does not work that way. So maybe the occasional luxury, then you would still have your daily bread for your day-to-day, stuff like that. So I think what I can share with you is that the lesson that I learned is know what tools are made for what purposes. So for vwra, for me, it's more of like a stabilizer in my portfolio. Hence, even if let's say it underperformed the SPY or QQQ, it's fine. I have already other instruments which are meant to create better returns compared to the benchmark of the SPY. So to end off the video, I'm not saying that tech is bad, I'm getting out of tech. Tech is still my core belief, but it's just that I'm trying to add on more stabilizer to my investment portfolio. And as of now, I'm actually more intentional now and always trying to look for ways to reduce risk. I can see that transition from a very aggressive investor to becoming someone who is more mindful of risk and trying my best to reduce risk of my overall investment portfolio. This is to ensure that the portfolio can grow as long as possible, beat inflation, and allow me to sleep peacefully at night. So that will be all for today. And if let's say you like videos like this, do hit on the like and subscribe button so that more videos like this will be recommended to you. And I look forward to seeing you in the next video.